Ever wish your money could work for you? Imagine if every dollar you saved could grow and multiply, creating a steady stream of income without you having to lift a finger. Sounds like a dream, right? That's what investing is all about. It's the process of putting your money into assets that have the potential to increase in value over time. It's like planting a seed that grows into a money tree. Just as a gardener nurtures a plant, you nurture your investments by making informed decisions and being patient. The earlier you plant, the bigger and stronger your tree becomes. Starting early gives your investments more time to grow, benefiting from the power of compound interest. Investing is the key to building wealth, reaching your financial goals, and securing your future. It allows you to take control of your financial destiny and create a safety net for yourself and your loved ones. It's time to stop dreaming and start investing. The sooner you begin, the sooner you can start seeing the benefits. This guide will teach you the basics of investing. We'll break down complex concepts into easy-to-understand terms so you can feel confident in your investment decisions. We'll cover different investment types and provide practical tips. From stocks and bonds to real estate and mutual funds, you'll learn about the various options available to you. Whether you're just starting out or need a refresher, this guide is for you. No matter your age or financial situation, it's never too late to start investing and making your money work for you. Let's get started on your journey to financial freedom. Together, we'll explore the world of investing and help you build a brighter, more secure future. Saving money is important, but it's only the first step. Think of saving as the foundation of your financial journey. Investing is what helps your money grow over time. It's like planting a seed and watching it turn into a tree. Imagine putting your money in a savings account. It might seem like a safe place to keep your money, but there's a catch: inflation. Inflation is the gradual increase in prices over time. Inflation is like a sneaky thief that slowly eats away at your savings. Even though your money is safe, its value decreases. It makes things more expensive, so your money buys less over time. For example, what you could buy for $1 today might cost $1.10 next year. Investing helps you outpace inflation. By putting your money into investments like stocks, bonds, or real estate, you give it the chance to grow. When you invest, your money has the potential to earn returns that are higher than the rate of inflation. This means you can actually increase your purchasing power over time. This means your money grows faster than inflation shrinks it. Think of it as your money working for you, growing and multiplying while you go about your daily life. Investing can seem intimidating at first, but with the right knowledge and tools, anyone can become a successful investor. The benefits of investing go beyond just financial growth. It can provide you with financial security, help you achieve your life goals, and even allow you to enjoy a comfortable retirement. So start learning about investing today. The sooner you start, the more time your money has to grow. Remember, every great financial journey begins with a single step, and that step is investing. Investing might seem confusing, but it doesn't have to be. Think of the investment world as a map. There are many different paths, each leading to potential profits. Let's explore some of the most common investment options. Stocks, owning a piece of a company. Bonds, lending money to a company or government. Real estate, investing in properties. Mutual funds and ETFs, baskets of different stocks or bonds. Cryptocurrencies, digital currencies using cryptography. Each investment type has its own risks and rewards. Understanding these is crucial for making informed decisions. Imagine owning a tiny piece of your favorite company. That's what stocks are. When you buy a stock, you're buying a small portion of ownership in a company. As the company grows and becomes more profitable, the value of your stock can increase. Stocks offer the potential for high returns, but they also come with risks. The stock market can be volatile, meaning stock prices can go up and down. It's essential to research companies carefully and invest for the long term. Section 5. Bonds, lending for a steady income. Bonds are like loans. When you buy a bond, you're lending money to a company or government. In return, they promise to pay you back with interest. Bonds are generally considered less risky than stocks. They offer a more predictable income stream, making them popular among investors seeking stability. However, bond returns are typically lower than potential stock returns. It's a trade-off between risk and potential reward. Section 6: Real estate more than just a home. Real estate involves buying, owning, and selling properties. This can include residential properties like houses and apartments, or commercial properties like office buildings and shopping centers. Real estate is a tangible asset, meaning it has a physical existence. It can provide rental income and potential appreciation in value over time. However, real estate is also illiquid, meaning it can be challenging to sell quickly. Section 7: Mutual funds and ETFs, investing made easy. Don't have time to research individual stocks? Mutual funds and ETFs are here to help. They pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other assets. This diversification helps spread risk and makes investing more accessible. Mutual funds are professionally managed, while ETFs are traded on stock exchanges like individual stocks. Cryptocurrency, the Wild West of finance. Cryptocurrencies are digital currencies that use cryptography for security. Bitcoin, Ethereum, and Litecoin are some popular examples. Cryptocurrencies operate independently of central banks, making them decentralized and potentially resistant to censorship. However, cryptocurrencies are highly volatile and speculative. Their values can fluctuate dramatically, making them a risky investment. It's essential to thoroughly understand the technology and risks before investing in cryptocurrencies. Investing smart tips for beginners. Whether you're just starting out or looking to refine your strategy, these tips will help you navigate the world of investing with confidence. Now that you know the basics, let's discuss some practical tips for successful investing. These tips are designed to help you make informed decisions and build a strong financial future. Start early. The power of compounding means your money grows exponentially over time. By starting early, you give your investments more time to grow, which can significantly increase your wealth in the long run. The earlier you start, the better. Even small amounts invested regularly can add up to a substantial sum over the years. Don't wait for the perfect moment. Start now and let time work in your favor. Diversify your portfolio. Don't put all your eggs in one basket. Diversification helps spread risk and can lead to more stable returns. Consider a mix of stocks, bonds, real estate, and other assets to balance your portfolio. Spread your investments across different asset classes to reduce risk. This way, if one investment performs poorly, others may perform well, helping to offset losses and protect your overall portfolio. Invest regularly. Set up automatic investments to consistently grow your portfolio, even with small amounts. Regular investing can help you take advantage of market fluctuations and reduce the impact of volatility. Do your research, understand the investments you're considering. Knowledge is power in the world of investing. Take the time to learn about different investment options, their risks and potential returns. Read about companies, analyze market trends, and seek professional advice if needed. Staying informed will help you make better investment decisions and avoid common pitfalls. Be patient. Investing is a marathon, not a sprint. Building wealth takes time, and it's important to stay focused on your long-term goals rather than getting distracted by short-term market movements. Don't panic sell during market downturns. Market volatility is normal, and reacting emotionally can lead to poor decisions. Stay calm and stick to your investment plan. Stay focused on your long-term goals. Regularly review your investment strategy and make adjustments as needed, but always keep your ultimate objectives in mind. With patience and discipline, you can achieve financial success. Risk versus reward. Finding your comfort zone. Every investment carries some level of risk. Generally, higher potential returns come with higher risks. It's essential to find the right balance between risk and reward based on your financial goals, time horizon, and risk tolerance. If you're risk-averse, you might prefer conservative investments like bonds. If you're comfortable with more volatility, you might consider stocks or even cryptocurrencies. The key is to invest in a way that aligns with your individual circumstances and comfort level. Start today. Your future self will thank you. Investing is one of the most powerful tools for building wealth and achieving financial freedom. It allows your money to work for you, growing over time and helping you reach your goals. Don't let fear or procrastination hold you back. Start small, learn as you go, and stay consistent. Remember, the best time to plant a tree was 20 years ago. The second best time is today. Take charge of your financial future and begin your investing journey today.